Hello, fellow traders and Market Club members everywhere. Adam Hewison here, president of INO.com and co-creator of Market Club with your video market update for Friday, the 19th of April. Hard to believe. Well, it's been a heck of a week, to say the least, with bombings in Boston, which basically overshadowed the entire market for the week. And this has been a big down week for most stocks and certainly the indices. And we'll be looking at those in more detail. Gold obviously took it on the chin this week, and also we had a huge move in crude oil to its lowest levels in quite some time. Also, earnings have been coming out somewhat sporadically. You may have been seeing our videos that we've been putting out on earnings and on Microsoft and Google yesterday, for example. A perfect way to look at and manage the triangles. We were long Microsoft, worked out very well. In Google, we're still on the sidelines with that. So let's go right to our portfolio manager and let's see what's going on. So we're looking at gold. Gold is actually up a little bit today, just 0.10%, still down 10% for the week though. That's the big thing. So let's just go right there now and look at this 6-month chart. And we are looking at a daily, but this is not a particularly positive chart. When you see this sort of pattern after 3 sharp down days, this is what's called a potential, has the potential of being a flag formation. A flag formation is when you come down like this and then you have this sort of look like that. And usually it's a continuation pattern to the downside. We're flattening out a little bit in the Williams percent R, in the MACD rather, but nonetheless the pattern still looks negative to me, and we could see gold actually going to $1,200 an ounce. So that's still quite a ways from here, almost $200. I think it's just going to erode, but I think the next couple of weeks will really tell the picture in gold. So let's clear the screen. As you know, with our trade triangles, which I showed you just earlier, you can see we've been basically short this market for quite some time. It's put our monthlies in way back here. It's 1672. That's when really things turned around for gold on the downside. And we last were short this market at 1653 on the weekly. And if we put the daily, we've covered that short today. We were short from this level here, 1554, and that was covered at 1399. So that's basically $150 profit in this, $155 profit in this one last trade. So very, very nice. That's $15,000 a contract. So let's go to our next market. Next market we're going to be looking at is going to be oil. Much the same thing in oil. This looks really bad. The fact that you have this type of pattern does not lend itself well when you have these 2 points, the little pivot. So this is a pivot point right here. And the major support for this, we have to just clear the screen and actually go out to a little further out. Let's just take some of the trade triangles off, keep it simple. But the trade triangles have done extremely well here, but let's just zoom this out a little bit further. And you can see once we go out, and let's put a line chart in here. It's very simple just to put a line chart. Just click here, and we can go, let's go max on this. And you can see this is where we think this is where the support's going to come in, right around these levels right here. That's $80. You can see it's hit it several times back here. 1, 2, 3, 4, 5. So I think that's the next logical place for this market to go. It's just going to erode. It's not going to be, I think, as uncertainty creeps into the world markets in terms of the economy, there'll be less demand for oil, and this market is going to continue to trade down. However, it is programming itself for a very large move on the upside in the future. But let's just watch where it goes right now. So going on to our next market is the euro, and I said to you that the euro basically closed about unchanged for the week. And if we just go to weekly charts and put a candlestick chart in here, you'll see, let's just scope it in, very little change for the week, meaning the dollar was actually stronger for the week. The euro dollar went down against the dollar, so the dollar is slightly higher for the week. It's 0.25%, barely registering anywhere. So generally speaking, we think this market is going to continue to move sideways. Our trade triangles here, and this is the cool thing about Market Club. If you're not using our audibles, you should. Here they go. This market has a negative 55% reading, indicating that it's moving into a trading range. We do not expect to see any big moves come out of this market in the very near term. It is time to move to the sidelines until a steady trend resumes for this market. So there you have it. There you have our talking chart technology. It's on every single market, every single chart, and it's very valuable just to get a second opinion about what the trade triangles are saying. So let's go to our next market. And this is the Dow, and the Dow was under pressure because of some of the reported earnings that came out today. GE was down, IBM was down, and let's just put a very simple 6-month chart. This is the chart of the Dow so far for the week, and it's going to close down 2.24% right now where we stand now. The MACD, you can see, is still above, but it's beginning to flatten out. You can see, if I scroll this down a little bit, you can see the MACD is beginning to flatten out and go down this way a little bit. This is on the weekly now. If we go on the daily, let's just go back to the dailies. And you can see that's how we stand right now. Now the key thing here is going to be the 13,375 level. If it goes below that, then I think that's going to be a little bit negative for the chart. You can see on the daily we've actually turned down on the MACD. So there you have the MACD looking negative, and looks like you'll see more pressure. But the market's definitely closing lower for the week unless there's a massive rally today, which I do not expect to see. So here we are on the S&P 500 up today, and that's a positive, I guess, but the reality is it's still down. Our trade triangles are saying 60, a trading range. If you're an intermediate term trader, you should be out of this market right now, as we still could see this market go lower. You can see the MACD is still negative on this, but you've also, if we put some of our other indicators in, you can see the trade triangles are certainly there. There was the weekly kicked in right there at 1539. It's 1553, I understand, but it's still a negative signal. And if we put our other, let's say our parabolics on there, you can see, yes, they moved also to the negative side for this index. So let's go to our next market. This is the NASDAQ. NASDAQ was taking a lot of pressure because of Apple, of course. Apple traded under $400. It reports earnings on Tuesday, so we'll see how that goes. But nonetheless, this particular index appears to be just rolling over. You can see just rolling over like this, just rolling over. And the question is, if you look at the weeklies, let's just clear the screen off. If we go to a weekly chart, you'll see, and the weeklies are very, very useful for this. You can see the weeklies down, not the lowest. It depends if we close under 3,200. That will be the lowest close we've seen in about 6 weeks, 7 weeks. So let's see how that plays out. But nonetheless, we're very close to tipping point right here on the MACD. So let's see how that plays out. I think that's all we have for this week. Lots going on. We've got some other reports coming out today. Hope to do one on Apple, or if not this today, it'll be on Monday, to show you how we've done in Apple using our trade triangles. I think you'll enjoy seeing that. But every success and have a great weekend. I'm Adam Hewison. I'll see you Monday.